Good afternoon. George Cavaligos for HFT Bonds. What do we find out today? Well, early this morning, the market was retesting the highs from Friday. Another possible double top. Market sold off from there, and we worked our way down to finding some minor support levels. We got a little bit of a bounce here in the last hour. I'm wondering if we're going to go and retest the lows from Thursday. It's not that far from here. Might be the trade for early tomorrow morning. I'm not looking for a lot here. I think what we're seeing is a very light volume trade today. If the volume was heavier, I might be more negative. I think we're just consolidating in front of all the event risk that we have later this week. FOMC meeting starts Wednesday, the announcement's Thursday. GDP, ECB meeting Thursday, and then the unemployment number on Friday. It's a lot on our plate and a lot of event risk, and I think people are going to just square up positions here. We did see a big jump in open interest on Friday in the 10-year note. I think you probably got a good chunk of those traders that were probably long out of the market here today. I think we'll get some more out tomorrow. That's why I'm kind of leaning towards the short side here. But I really don't have a big axe to grind right now. I still want to be a little bit friendly. I think we're looking at a Fed that's going to continue with QE. I think we're looking at an ECB that is probably going to have to do some more, whatever they're going to do, whether it's cut rates, OMTs, LTROs, QE maybe? I doubt it. I don't think they could pull that off with the Germans in control of things there. But you know, and then a GDP number that's been revised steadily lower here every time we get an economic number that factors into GDP. I actually saw one of the German bank economists today forecasting a negative 0.1 GDP number. Most people, I think, are up around 1 or a little bit below 1% GDP after, you know, initially estimated around 2%. So we've already scaled that back quite a bit. So what does that do for the bonds? I don't think anybody is going to buy the slowing economy argument until equities roll over, and until we see the idea that, you know, the economy is slowing, it's going to be tough for bonds and notes to rally much from here. So beyond the Fed, obviously, the Fed's the 8,000-pound gorilla in the bond room. You know, we have to know what they're doing, obviously, more so than what the economy is doing at this point. But nevertheless. So a little bit lower. Thursday's low in the 10-year, I think it was 126.0203, and what was it in the bonds? 133.18, 16.18. I want to see what happens there. If that holds, then maybe, you know, we can bounce again back towards the upside. I still kind of think we should go and test last week's highs, 136 even and 127.10. But perhaps we're going to wait for the Fed or you know, the GDP or the unemployment number. You know, any one of those is big enough that it can push the market, and if all three are looking the same way, we could have a real strong move one way or the other. So, alright guys, thanks. Have a great night. I'll see you tomorrow morning.